Good day, everyone, and welcome to today's webinar, Smart Giving Strategies to Maximize Your Impact and Minimize Your Tax Burden. My name is Thad Austin, and I serve as the Vice President of the Every Age Foundation. And I'm one of your co-hosts, along with Andrew Warner, whom you'll hear from in just a minute. We are so glad that you have joined us, whether you're just beginning to think more strategically about ways to give, or you're already using some of these tools. I think you'll find today's session both enlightening and also empowering. Many of us give because we want to make a difference and to invest in causes and communities that reflect our deepest values. But often, the complexity of taxes and financial rules can make that generosity feel complicated or even discouraging. Today's session is designed to simplify all of that. And we'll look at practical, proven, smart giving strategies that allow your donations to go further. Approaches that not only reduce your tax burden, but also increase your ability to support the organizations and missions that you care most about. During our time together, we'll explore three key tools for effective charitable giving. The first is appreciated security. So, how donating assets like stocks can help you avoid capital gains tax and give more without giving more out of pocket. Second, we'll take a look at qualified charitable distribution. So, how you can leverage your IRA or 401k or retirement account to fulfill required minimum distributions and make charitable gifts that lower your taxable income. And then third, we'll discuss donor advised funds, how these flexible giving accounts allow you to plan strategically for generosity over time. So here's how our time together today is going to go. Our presenter will walk us through each of these giving strategies, explaining a bit about the problem that each of these strategies solves, what the law allows, and how you can benefit. And then, most importantly, how you can put these ideas into practice if you are interested. After each section, we'll have time for Q&A. So if there is a specific question that you have, please feel free to go ahead and pop it into the Q&A function of Zoom, which you'll find at the bottom of your screen. You can put that in at any time, and we will try to answer as many questions as time will allow. So now I'm going to turn things over to my colleague and friend, Andrew Warner, who will introduce our speaker.
Thank you, Thad. My name is Andrew Warner. I serve as president of the Wisconsin Foundation, UCC. Thank you for joining this webinar. Today's presentation is purely for educational purposes. We encourage you to seek out your own tax and legal advisors. Our presenter today is Travis Marks, Director of Generations University for the Pension Boards of the United Church of Christ. In that role, he leads the educational initiatives for the pension boards, drawing on 2 decades of financial advising to help people navigate that intersection between faith and finance. And we're thrilled to have him with us today. With that, please join me in welcoming Travis Marks.
Thank you so much, Andrew and Thad and everyone. It's a pleasure to speak with you all today. I'm going to share my screen, and I have a few slides I'm going to go through to talk through the 3 strategies that Thad mentioned. And after each one, I'll open it up if you have any questions. So I'm going to go ahead and share my screen now. All right. Well, hopefully everyone can see my screen here. So today I'm going to discuss the 3 strategies here: gifting appreciated stock, qualified charitable distributions, also known as QCDs, and then donor advised funds. And as Andrew mentioned, this presentation is meant to discuss general gifting strategies and tax considerations, but we always recommend consulting with your individual financial advisor and tax professional for the impact on your particular situation. So starting off with gifting appreciated securities. So the idea here is that by gifting stock instead of gifting cash, donors can save on 2 types of taxes, preserve their cash on hand, and make a bigger impact on your mission this year. So this section focuses on stock, but you can also look at this more broadly as just other appreciated securities that you have. And so with that, I want to start off with some background here to set the table on what we're talking about. So what is a stock? Many of you know what a stock is, but just for those that just to set the framework here. So a stock is a type of investment that represents an ownership share in a company or corporation. Here are some common stocks that are held, companies that you may be familiar with. And then another example of appreciated stock might be within a mutual fund. So a stock mutual fund is, for example, an index fund or a electronically traded fund is a group of stocks opposed to just shares of a single stock in a single company. And so a fund will have many stocks within, but you can gift that as well. To give you an example of what this works, how this works, let's talk about some terms here. Cost basis, market value, and capital gain. So here's a hypothetical example. Let's say you purchased Apple stock in a taxable investment account in the year 1999. So that was before they released the iPhone. They were just sort of maybe just coming out with the iPod, and so the stock has grown tremendously since then. So let's say that cost basis in the year 1999 was 5,000, and that's what you paid, and you didn't purchase any additional shares. And the current market value, let's just say that was $200,000. So that's a pretty big gain, right? So if you were to sell that stock, sell all of it, you would have a capital gain of 195,000. The difference between the market value and the amount paid. So gifting stock directly versus selling and then gifting stock. So here's an example of how this could work. So in example A, you gift the stock directly to the charity. So let's say you sold $50,000 worth of appreciated Apple stock, and that cost basis was $1,250. So the value of the stock is $50,000. By gifting it directly to the charity, you avoid paying the long-term capital gains rate of 15%. So that's a zero here for long-term capital gains taxes. Then you can, you can itemize this on your taxes, right? You can note the $50,000 charitable contribution. In this case, we're assuming 22% federal marginal income rate, and the overall donor tax savings in this case is 11,000. So that's how much money you saved from avoiding the long-term capital gains and also getting a charitable deduction. And it's important to note that this doesn't consider any state or local taxes, alternative minimum taxes, or any limitations on itemized deductions that may be applicable. And again, this is just an example, hypothetical example of how this would work. But comparing the $11,000 tax savings to example B, where you sold the stock and then gifted the stock to the charity, here's what that looks like. So you sold the same $50,000 worth of stock, but instead of avoiding long-term capital gains, you had to pay about $7,300 in long-term capital gains, and then you get a charitable deduction on the gift, but you only get a tax savings of $2,078 in this case. So this is a great example of how this works and the benefits of gifting the stock directly to the charity versus selling it and then gifting the proceeds. So let me stop there. If anyone has any questions.
Travis, for someone who may not be familiar with this kind of strategy, are there any limitations on what would count as an appreciated security? Any restrictions on what kind of assets can be donated in this way?
It's a great question. So in this case, we're talking just about stocks, bonds, mutual funds, perhaps currencies, things like that. Um, but from a taxable account. Not in a retirement account, which we'll get to in a moment. Does that answer the question?
Yeah, thank you.
Yeah, that's
You're
really
welcome.
great, Travis. And so, if I understand correctly, there's tax implications. There's a taxable event that happens if an individual sells a stock and then donates the cash. However,
Correct.
if the individual, instead of selling the stock, donates the stock itself, then the nonprofit receives that stock. There's no taxable event that's taken place. Am I tracking with you there?
That's correct. That's
Great.
correct. Yeah, exactly. Because what happens is that you had this vastly appreciated stock, and when you sell it, you have to pay capital gains on it, and then you can deduct the gift, but you have to pay a large capital gain. In this example, we're avoiding about $7,300 worth of capital gains by gifting the stock directly.
Yeah, and then just a quick follow-up there. So my understanding is that the reason that we're avoiding the taxable event is because the nonprofit that receives and either keeps the stock, or in the instance that they sell the stock, because they're a nonprofit organization, there's no taxable event in that case. Is that right?
That's correct.
Okay, fantastic. Andrew, back
Great
to you.
question. Yep.
And Travis, we have a question that came in from the audience. How do the changes on itemized charitable deductions in the big beautiful bill affect this calculation?
Um, that's a great question. I can let me research that and perhaps follow up with a complete answer on that, if there are any. I'm not familiar offhand with that.
I'm not a tax
But
accountant either, but my understanding is that the big beautiful bill continued the higher standard deduction that we've had for the last several years. And so, how this might affect it was that you'd want your stock gift to be greater than what you get with the standard deduction. And so it wouldn't make sense to give only a $1,000 worth of Apple stock. But as your example says, if you're giving 20,000 or 50,000, is when you'd see the benefit.
that's correct. Yep.
And then, Travis, I'd be curious, sometimes as I've talked with folks, they kind of see or understand the appreciated security, the charitable kind of aspects of giving appreciated security is something very complicated and only for the wealthy. So, can you just give us some practical steps that an average donor could take if they wanted to make their first stock gift to a nonprofit?
That's a great question, and I know that Chris Hall is also on the call, and he'll go over the logistics of doing that through free will. But to your point, it may not be something that people have done before, but it's pretty simple. And with the free will tool, which Chris will cover, they kind of walk you through just online a couple of steps to set that up, and then you provide documentation and then send that through. But I think when Chris covers that, I think it will be clear how easy this really can be.
That's great to know that it's easy. And so there's ways that you can work through kind of a third party, such as Free Will, that can help to facilitate the transaction. I also understand you can go direct through your broker. So if, let's say, you are investing with Schwab or Fidelity, there are kind of internal mechanisms that they have in place that they can facilitate
Oh,
such
sure.
transfers.
Absolutely. Yes. This is, it is a pretty common thing on the whole. And so if you were to call your brokerage or call your advisor and say you want to make a charitable gift of stock from a taxable account, they'll be able to walk you through it. There's likely some paperwork that you have to fill out, but I think it's pretty straightforward.
Thank you, Travis. Why don't we move on to the IRA gifts?
Sure. Yeah, so moving on to the IRA gifts, um, this is called a qualified charitable distribution, a QCD for short. And this is a donation that is transferred directly from an individual's IRA to a qualified 501c3 charity, also known as an IRA gift or IRA charitable rollover. And to set some context here, first, what an IRA? An IRA is an individual retirement arrangement. It is a personal tax-advantaged investment account. It's designed to help individuals save for retirement. Often, when money is contributed, the individual receives a tax deduction up front, and then they are taxed when the money is withdrawn in retirement. So, so money can be withdrawn in retirement, but there's also something called a required minimum distribution. And the government says that there's a minimum amount you must withdraw each year from your retirement account, starting at it's now age 73 for people turning age 72 on or after January 1, 2023. In 2025, each taxpayer can offset up to 108,000 of their RMD by making qualified charitable distributions from their IRA. So again, you're required to take a certain amount out, but if you were to use some of that and gift it, then you can fulfill that requirement and also avoid taxes on that distribution. And to give you an example of what this looks like, let's say that an individual has an RMD, a required distribution of $30,000. They decide to donate 20,000 of that to their favorite charity via a QCD. And by doing that, they fulfill a portion of their required distribution, so that they only will owe income tax on $10,000 instead of the full $30,000. And just to note that the payments should go directly to the charity versus getting a distribution and sending it, and that's done for tracking and tax purposes. And payments to private foundations and donor advised funds are not eligible for QCDs. And again, I always recommend consulting with a financial advisor or tax professional for more details here. So why did donors give QCDs? A QCD can reduce taxes when taking an RMD. You can make an immediate impact on a charitable mission. Who is eligible to make a QCD? Well, you must be age 70 and a half at the time you plan to make the QCD. And the RMD, again, is for folks that are required to. It's for folks that are 73 or above. Money typically comes from a traditional pre-tax IRA. You can do this. You can make a charitable distribution from a Roth IRA if you have that. But they're already federally tax-free from your pre-tax IRA, so it may not be as advantageous to do that. 401ks and 403bs, which are company retirement plans, the pension boards is a 403b plan. You can't make a QCD directly from there. And IRAs that are receiving a current employer contribution, for example, there's something called a SEP IRA or a simple IRA. Those are not eligible if they're receiving employer contributions. So again, on this, just to kind of frame us what this is, you have an IRA. You would like to make a charitable gift. You can take a distribution and move that directly to a charity to avoid taxation on that if you're over the age of 70 and a half. And in 2025, you can actually do, again, 108,000 of the RMD into that. Any questions on that? I will say also, just a quirk to be aware of, that the first dollars that come out of an IRA during the year count towards the RMD. So it's often recommended to execute a QCD early in the year to avoid any conflict. And so let's say that your required distribution for the year was $50,000 and you wanted to gift 30,000 of that to a charity. You would make that first distribution to go directly to the to the charity to satisfy that $50,000 RMD. Does anyone have any questions on that?
Travis, just one question.
Sure.
Are there any common mistakes or misconceptions that people have about QCDs that they should avoid?
I think this was one of them to mention here about the first dollars that come out. And so I think what I have seen is that people will satisfy their RMD for the year. Some people like to do that in the beginning of the year. They're likely to get a letter or an email from their brokerage saying you have to take out this money during the year. They'll take it out, and then they'll want to, use some of that to put towards the qualified charitable distribution. And so that's why the note is here that you want to plan for that. Like right now is a good time to plan for that. If you have to take a RMD for next year and you want to give some of that, plan to communicate that to your advisor, your brokerage, your brokerage, and make sure that first distribution goes to the charity. That's what I would say is a pitfall that happens sometimes.
Yeah, and Travis, it
would,
sounds like that this is most effective, if I understand what you're saying, with traditional IRAs that would have they would be eligible for taxes on that required minimum distribution. So if I'm following you, by having a qualified charitable distribution from a traditional IRA, you're bypassing the taxable event that otherwise would occur. And that's part of the reason why you're saying it has to go direct to the charity. Is that right?
That's correct. That's exactly right. And for many people, I was, kind of I explain it like this, that your pre-tax IRA is sort of in partnership with the government. So they own a piece of that, right? So any distribution is partly theirs. But by making the distribution directly to the charity, you avoid taxation on that piece when it's distributed. So that is why you go directly to the charity.
Yeah, and that makes a lot of sense because it's the same basic concept as the appreciated securities, where if you were to sell the appreciated security, you're having a taxable event in much the same way here with a qualified charitable distribution. If you were to just take the funds and then give it, you've already incurred the taxable event. So what we want to do is to give direct to the charity. Quick follow-up question then is what kind of nonprofits or causes are eligible to receive QCDs, and are there any limitations that donors should know about?
Yeah, that's a great question. My understanding as far as limitations, that the payments to 503, charities are fine. Private foundations and donor advised funds, if you want to send money to them, that are not eligible for QCD. So that's something to be aware of.
That's really helpful. And I'll just
Yeah.
say personally, as I've worked with donors, even within the past year, I had a donor that was in my office and he said, "Man, I wish that I had known about this earlier," because he said, "I'm paying all kinds of taxes and I'm also making these charitable donations to my church or to
Yeah.
civic causes and those kind of things." And he said, "I could have been avoiding all of that together
Yeah.
so that I could actually have increased the amount of support that I was providing while also decreasing my tax burden." So I think that for many folks, especially that are of retirement age, this is an incredible strategy that they can employ. Andrew,
I
I know we've
agree.
got a few questions in the
Yep.
Q&A. I'm not sure where you want to head from here.
Sure.
We had
Yeah.
one particular question that related to a little more detail about a particular tax situation. I think we'd recommend you speak with your own tax consultant for your own particular situation. But another question, more general one, came up. Wondering about, are there some reasons why one would do a QCD before age 73 before that RMD kicks in. So why might someone who's 70 and a half start doing the QCD?
Yeah. Well, you may have a charitable need, a wish to make a charitable contribution from your IRA, and for many people, depending on your career, but a lot of people that I've dealt with, most of their retirement assets are within IRAs for example, or a retirement account. So they have assets, but they don't have them necessarily in cash to give. And so this is a good way to do it, where you can, like Dad was saying, you can give the money and also not take a tax hit for distributing the money in first.
And just another reminder, both about stocks and about IRAs, of course, that we can designate a charity as the beneficiary upon our death, so that an IRA account can be used during one's lifetime to make charitable gifts, and then in one's estate to make another charitable gift. Why don't we move on to DAFs?
Sure. Yeah. So donor advised funds. So finally, donor advised funds. So DAF is a charitable giving vehicle that allows individuals to make an irrevocable contribution to a sponsoring organization, which then manages the funds. The donor can make recommended gifts, grants to qualified charities over time. So you make a charitable gift to a donor advised fund in year one. It could be a large amount, but you want to spread that gift out over time. And then you, as the donor, can decide, how and when that money is distributed. And so it gives you a lot of flexibility, but it also gives you the ability to take advantage of a larger deduction by perhaps putting more than you want to give in year one, and spread out that gift over time. So here's the flow chart of how this would look. So first step, donor makes a gift to a donor advised fund. Gifts can include appreciated stock, cash, mutual funds, ETFs. Donor receives an immediate tax benefit in the year of the gift. And then the donor advised fund, the money is invested and distributed over time according to the donor's wishes. And here's an example. The grants are paid out per the donor's instructions over time to charity A, B, C in year 1, 2, 3, 4. It's up to you to decide that. And then while the charitable gifts can happen over many years, the donor can conduct the full gift in year 1. And that's why this can be really beneficial. If you're trying to decrease your taxable income in a particular year, you could take advantage of making a large gift to a donor advised fund and then spreading out that gift to benefit the charities over time. Potential tax benefits. The donors can deduct contributions from the taxable income. They can receive up to 60% of adjusted gross income for cash donations and 30% for appreciated securities. Does contributing to a donor advised fund require a donor to file a separate annual tax return? No, it does not. And then what happens to the remaining assets at the donor's death? So you make this large contribution that you plan to distribute over many years, but of course life is very unpredictable. But that's not a concern in the context here for making those gifts, because in general, the donor may name a charitable beneficiary on the funds, can impose a grant schedule in advance, and or name a successor to assume grant-making responsibilities so that the gifts are given as you intended over time. And so that's it for donor advised funds. Does anyone have any questions that I can answer for those?
Can you just let us know if there's any restrictions on the kind of gifts that you can make out of a donor advised fund? Any restrictions on the purposes or uses of those grants?
I am not familiar with restrictions on the purposes of those. I think that's something I could definitely get back to you all on. As far as the types of gifts, it's pretty broad. Cash, stocks, bonds, other securities, things like that can be donated.
And so really the donor advised fund can combine the first example that you gave with giving appreciated stocks, that 50,000 gift of Apple could go into the donor advised fund, and then from there could be transferred into gifts to charities over multiple years.
Exactly right. Yep.
Yeah, and Travis, I'd be curious because it sounds like that with the first example that we discussed, which was the appreciated securities, and then the second, the retirement accounts, that in both of these cases, there's a institution that's holding those funds, and those funds are transferred directly to the charitable organization. In a donor advised fund situation, however, there is a third party that's involved. Is that right?
Yes, that is correct. Yes. And that third party, it will make the gifts over time at a schedule that the donor sets up. And so, it creates a lot of flexibility and planning. So if you have, for example, the case with Apple stock, you can certainly give that in year one and walk away. But if you wanted, $50,000 to be contributed, to be, gifted $5,000 a year, you can spread that out over 10 years, and that stock can continue to grow over time, assuming it did. So it really does give a lot more flexibility, and you get to enjoy the tax deduction in the first year. You don't have to wait for that.
Right, yeah. And it sounds, I mean, from what you got on the screen right now about the requirement that there's not a requirement to file a separate annual return. It sounds like there's a difference between a donor advised fund and a private foundation. So some folks, especially high net worth individuals, might establish a private family foundation or those kind
Yeah.
of things. But that requires a lot more kind of involvement with kind of a legal
Yeah.
filings and those kind of things. This is a lot more simple approach. Am I following you there?
Yes, you're correct about that. Yes, a private foundation has a lot more complexity, requirements for filings, requirements for meetings and documentation and things like that, to make sure that the money is being handled appropriately, that it's set up to fulfill that purpose. So there's a lot more requirements, and mandates, and responsibility to do that.
Great. Yeah.
And then, Travis, so if someone's looking to set up a DAF, are there minimal or practical entry points for someone to start a donor advised fund? And what factors should they consider when choosing a sponsoring organization?
Um, that's a great question. As far as practical considerations, I think just going back to the basics. Yes, you could gift money directly to a charity. You might want to consider a donor advised fund if it's a larger gift, or you don't want that gift to be. You want to be more strategic in how that's paid out over time. As far as one donor advised fund versus the next, I don't have much to say on that. But I think someone could work with their advisor. They may have recommendations there, and then I think Chris will likely get some of the logistics on that, on the free will side.
Yeah, that's really great, Travis. And I'd be curious too, because I know that there are a lot of donors that, oftentimes want to involve their family or children in their giving. And so I'd be curious how a donor advised fund could actually be a tool for passing on generosity and teaching about stewardship to the next generation.
Oh, absolutely. Yeah. And that's a great question, or a great point, that you can, name a successor in grant making responsibilities over time. So if you want a spouse, or if you want a child to carry on that legacy of gifts when you're gone, that money has to go to charitable charities over time. But maybe that's something that they could change the charities if that's something that they're able to do. And so it gets them connected with the idea of giving money over time as well.
Yeah, that sounds fantastic. And I noticed that one of our participants said the thing that helped them decide on a DAF was the cost being so minimal and it comes out of the DAF and not any additional kind of funds. So it just kind of
Right.
simplifies things there. So that's incredibly helpful. You know, I think that with all of these three that we've talked about, we're kind of in some ways demystifying what some folks might be a little bit intimidated to do because they feel like, well, I'm not a major donor. I don't have, tens of millions of dollars in my account. These are actually strategies that you can employ at really any socioeconomic level, so long as you have the assets to be able to give. And so that's really, really wonderful. Well,
Yeah.
Andrew, anything else you want to mention before we transition?
I just appreciate, Travis, your overview of these three strategies. Thanks for helping us think about them.
Yeah, thank you
Yes.
very much, Travis, for sharing
Thank
your
you.
insights with us. And in addition to the theoretical knowledge about these smart giving vehicles, we also wanted to provide you all that are on the call today with helpful practical tools. So I am so glad to turn things over to Andrew, who's going to introduce our next speaker, Chris Hall.
Thanks, Thad. Our second presenter, Chris Hall, works with freewill.com. The pension boards, the Every Age Foundation, and the Wisconsin Conference, and many others have partnered with FreeWill to bring easy-to-use tools to our communities. Chris and his team help make non-cash gifts and estate planning easy to accomplish. Today, he'll help us understand the smart giving tools at FreeWill. Chris, thanks for joining us today.
Yeah, absolutely. Thanks for having me, and excited to share just a few simple ways that you could access these kind of tools and be able to give to the organizations you care about that are dear to your heart. So I'll share my screen and just walk us through some quick examples of what it looks like to use the freewill.com tools. So first, I'll do it through freewill.com and the Wisconsin Michigan Foundation site, and then I'll also show you it on Every Age, just so you can kind of see how both those sites work. But also just wanted to share before we do that, we work with a variety. So my role here at Free Will is I am the team lead of our faith team. We work with all of our faith-based nonprofits. And most of us who work on this team came out of a ministry context at some point, worked within churches or worked within faith-based nonprofits. And we've just had a lot of stories of folks who didn't know they could give this way. And even for us, when we were in the ministry context, didn't know that we could ask for gifts this way, and didn't know how to receive them. And so part of our desire with Free Will is to make this as easy as possible for the organizations you care about, but also make it as easy as possible for the donor to give to the organizations they care about. And so I just love when stories come together. We've been working with a local church. They were doing a big capital campaign push, and trying to really, they have a really old building and they were trying to get enough money to do the roof again. And they shared that you could give these ways, that you could, maybe make a gift of stock, or maybe make a gift out of your IRA. And there was someone in the congregation who then realized, like, oh, I'd never thought about giving a gift from my IRA. I'd never thought about what that would look like. And they actually then contacted their financial advisor. They talked a little about it, and they realized that they could be giving from their IRA the gift that they could give that year without changing their everyday giving, right? They were a regular supporter of their church. This wasn't going to change their income levels. This wasn't going to change the money they planned on living off of in their retirement. This was just extra money. They realized that they could give more in a one-time gift than they gave all the rest of the year through their recurring giving out of their checking account, essentially. And so they were able to give this gift. And when we talked to the pastor about it, they were like, talking to this person, they were so excited because they realized that even for them as a person living on a fixed income, they could still find ways to be incredibly generous. And it was just like a cool, like they were like, we have this retirement, but then we realized that we had this RMD, and we could give gifts from it. It doesn't change, like it helped us on taxes. So we've got tons of stories like that. People who decide that they're going to give a stock gift because they worked in the tech area and they bought, you know, $12,000 worth of stock that's now worth $30,000 worth of stock, or worth 30,000, and they're able to donate that. Only, you know, they can avoid the capital gains tax up to a certain amount, and then also still claim a $30,000 charitable gift, even though they only originally paid 12,000 for it. And so the benefits for not only the donor but also the organization they care about, the impact you can make with that organization, as well as the immediate way that you're able to meet a felt need with a community you care about is just really cool. So love sharing those kinds of stories. And then I'll share my screen now, and we'll start on the Wisconsin page. So you'll see here, you immediately kind of land here and you can say, do I want to give a donor advised fund, a stock, a gift from my IRA, or cryptocurrency? And I'll start with stock and securities just because it's kind of the most widely used, I would say, next to IRA. But you click donate stock, and then you're just going to fill out some basic information. I'm going to put test in my name just so you can see it. But and if you're ever like, why do you need this information? We've got these little helpful buttons that'll say, we just need to send you important updates about your gift, your receipts, documents, whatever may be needed. So we need your email. Why do we need your phone number? Those sorts of things. We have helper text just to make sure that you're comfortable with whatever you're putting in, or whatever you're being asked to put in. We'll never ask for personal information like give us your social security number or give us your account number through the like this way, unless you're doing like DocuSign. We do allow DocuSign where you can do that, but that's through a secure platform. Otherwise, I'll show you what I mean by that. Let's just put in our basic information. And then we'll go through and say, it says, how do you want this gift to be used? And then you've got a lot of different options. I can give, let's say I want to give specifically to the church that I'm a part of within the Wisconsin Conference. Click here, there's a drop down. I can start typing. So let's say I want to give to Cable UCC. I click there, and then I can leave a gift to, or I can leave just a message to the team there or whoever, just saying why I'm leaving that gift. That's obviously not like a legally binding statement you're making there, but it's always nice to share. Why are you giving the gift, or why does this matter to you? I press save and continue. Then I choose who is my financial institution. If we have all the major ones listed. If it's another one, you click other and type the information in there. But let's say I'm working with Fidelity. It's an individual account, and I want to donate. I can just start typing in, Netflix, and it'll find the ticker for me. I do that. It's going to estimate the current value of that stock. Again, this is an estimation. It's not necessarily saying it's exactly what it is, but it's helping kind of you understand. And then you can say, how many shares do I want to donate? It's going to show you the estimated value. And then when do you think you're going to transfer this? When do I think I'm really going to transfer these stocks? Let's say I want to talk to my spouse, and so I'm actually going to wait until next Monday to do it. Then you'll see a note here, Fidelity doesn't support e-sign documents, meaning I can't use DocuSign and just do it all right here. But what we can do is say save and continue. On the next page, you're going to review all that information, make sure it looks right, who's it going to, and where's the recipient. I'm going to download this, and then I'll get an email to the email I provided that will also send me these documents just in case, and it'll explain. Once I click download documents, I'll open these here in just a second once it downloads. We have then just a couple cover pages that are going to tell you exactly what you need to do. Read the stock gift form carefully, make sure you understand it. If there's anything you don't feel comfortable, call Fidelity at this number, use black ink, fill in your account number in section 1, because we don't ask for you to put that in digitally unless you're DocuSigning. Since the gift, if the gift is over 19,000, then I have to find a local medallion signature, but mine wasn't estimated to be that. Otherwise, just sign the form, and then make sure the date for fastest turnaround. Fidelity allows you to upload your documents, so I can scan, I can go to this upload transfer. It's just going to tell you all the different ways, or you can mail it, and it'll show you all of that information. And then it's going to have, we've downloaded the Fidelity documents for you. We've filled out everything except for your account number here for you. You print them, you fill that out, you sign it, and then you send it either digitally, like they said you could, or mail it to the address that they say. We have a letter recommending that these be transferred. You sign that as well, and then the rest is taken care of through your brokerage and through our team as well. Now, if you did have, I'll show you actually through every age. Let's go through stock here real quick. It's going to be the same setup. It's going to be, it's going to ask me for my name and address. Well, maybe it will if it loads. The fun of online Zoom when you've got three kiddos at home playing online video games as well. Let's see if this will load for me real quick. There we go. So I'll quickly put this information in as well. Again, just the basic information. And then I'm going to I'll choose to just go to the Every Age Foundation. I'm going to choose E-Trade because they do allow DocuSign, and I'll just do Apple this time. All right. There we go. Oh, there we go. And I'll do 4 shares. And then I can either download the documents just like I did with Fidelity by clicking this one, or I can make this gift securely using online DocuSign. So what that will do is I'll save and continue. I'll review it, make sure everything looks all right. And then when I say complete with DocuSign, it's going to load on the next page and say, you will receive an email at chris@freewill.com from DocuSign, providing you with a link where you can securely enter that information, sign it, and it'll be sent to E-Trade, and E-Trade takes care of it from there. So you don't have to print anything. You don't have to do anything other than electronically that way. So those are kind of the 2 options around stock giving. Before I go into the other types of giving, just wanted to pause and see if there are any questions or anything I can answer around that.
This is really great, Chris, and it looks really easy to use. So what and things that I'm just kind of bounce around in my head is that for donors that are looking to make a difference, like in the ways that Travis suggested, we can use the free will platform either through Wisconsin or Michigan or the pension boards or Every Age, and we can actually it can help us to facilitate the making of those gifts. Is that right?
Absolutely.
Okay.
Yeah. The hope for us is we want to take any of the guesswork out for the donor and for you, and make it as easy as possible. Obviously, if you work really closely with your financial advisor or with your broker already, and you're already donating lots of stock or donating out of your or whatever, you might already have a system set up. For most people, they don't. And then, so if you said, hey, did you know you could make a gift of appreciated assets? They might go, sure, maybe. Where do I start? We want to make it as easy so they don't have to call Fidelity or call E-Trade and try to track down the right forms, because sometimes you might download an old form. They update their forms fairly regularly. So unless you get it directly from them, you might get the wrong one and then it doesn't happen right. We want to make sure, let's just take all that. Let's do it ourselves. Let's give it to you immediately, fill out as much of it as possible, and then give you step-by-step instructions. So that's the truth with the stock and the IRA tool. The IRA tool works very similarly to the stock tool. I'm going to demo that just from the Every Age site real quick, and then I'll do DAF from Wisconsin. But so you click, it's the same thing. You're going to begin a QCD gift. Again, Now, with this, I can say I'm a financial advisor acting on behalf of my client. So financial advisors, you could even call your financial advisor and say, hey, I just got this email from Thad. It said I could give this way. I really want to do it. Can you take care of it? And you can send them the link and they can do it this way if that's easier for them or something they want to do. But typically it'll be, probably you using it yourself. But the same thing, I'm going to fill out all this basic information. And then what's nice about the RMD tool is that it can actually help estimate what is going to be your required minimum distribution this year. So let me just choose, and then this is nice too. I could say, hey, I want to do the help people in need, and then actually I want to make sure it goes to affordable housing. Type a message as to why that's important to me. Save and continue. And then we do ask that people confirm that they meet the eligibility requirements. We want to make sure that they are over 70 and a half. And then, but if they have questions about it, we have all these little helper. They're not subject to required minimum distributions during your lifetime, so you can't give from a Roth or inherited IRA. But you do have to confirm that you're 70 and a half. And then you choose your custodian. And then you can actually say, I'd love to know what my RMD is. And so you'd say, what's your balance of your IRA as of 12/31 of 2023? And I'm going to say it was 100,000. And then I'll say that my birthday was actually, I'll go with, let's do September 28th of 1954. And then, yes, my spouse is, and I'll do a similar, I'll do December 1st for them. Calculate my RMD. This one says 0 because I think because I put my spouse in as 55 actually, or as the wrong date, but let's say no, just to make that easier. And I think, if this is right, did I put the right date in? I think I did. I must not have put the right date in. Oh yeah, because I didn't put myself in as 73. I put it as 70 and a half where I'm allowed to, but I haven't gotten one yet. That's my bad. I need to put the date more as let's do 1949. Oh goodness. There we go. Let's see. There we go. Now that I'm actually old enough to be doing this, it'll tell you, hey, here's your estimated requirement distribution. Here's the penalty for missing that. You can delay it, but we kind of just are mostly trying to educate as much as possible. If this is the first time you've ever done it, or if you've just heard about it, or what that could look like. Want to give as much education as possible. If you want to learn more, we actually link right out to the IRS website that talks about required minimum distributions. But now that I know, like, hey, my estimated required minimum distribution is 6,000. All right, well then I want to make a $3,000 gift. Maybe I'll take the other 3,000 out, but I want to make a $3,000 gift. I think that I'll make that gift, again next Monday. Save and continue. I review the information, and then I download and complete the documents. It's going to be the exact same thing as it was with the stock tool. It'll also tell you the other ways that you could do it. Hey, you could complete this over the phone. Call Charles Schwab here. You can complete it by checkbook if you have an IRA checkbook with your financial custodian. But otherwise, you download the documents, and it's going to give you the same kind of thing, right? Here's our cover page. Here's everything that you need to know. Here's where you need to sign, what section you need to sign, what page you need to sign on. For the fastest turnaround, you can upload your documents at Charles Schwab's website. Here's a link to the website. Otherwise, you can mail it. You can do express delivery if you need to do it sooner, and that might be that's actually a different address for Charles Schwab. We're going to make sure we take all the guesswork out of it for you and then have your document ready for you to fill out, sign, and send on its way. So any questions around the IRA tool in that regard?
So I'll just ask, Chris, is there any fee to the donor associated with utilizing these services? I know that our organizations have the subscription that we've paid, but does the donor actually incur any fees as a result of utilizing free will?
No, there's no fee for the donor. If they donate crypto, there is a liquidation fee for cryptocurrency, but it's not something that they're going to pay. It's just going to be, hey, I made this donation of crypto, and I think it's like a 1% liquidation fee. But I actually think right now, I don't want to misspeak on that. I think right now free will still covers the liquidation cost on cryptocurrency, but I need to look into that. But otherwise, we're really just taking the legwork out of them having to go to their financial broker or do this on their own, and they're just transferring money out of their IRA or sending their securities to your broker who's going to liquidate them or hold them or whatever. And so no, there's no fee to the donor around that at all.
That's great. And from what I gather from the demonstrations you've done thus far, free will is basically consolidated the appropriate forms
Mhm.
for it. So the forms that you're showing us aren't actually free will's forms. If I have my funds with Charles Schwab or with Fidelity or with any other broker, you're actually providing their form that I can fill out. So instead of me as a donor having to call my brokerage firm and talk to somebody who doesn't know what I'm talking about, you've taken the guesswork out of it by providing my brokerage the specific form that they need to complete. You've already just got it off their website. Is that right?
Yep. Yeah. So we're going to have their forms filled out. But the beauty of it too is that we're going to have your information. So assuming they're trying to donate to Every Age or trying to donate to one of the churches within the conference or something like that, we've already got all of your transfer information, your address, your EIN, the important information that they would need to get from you to then pass on to their broker. We've already got that, and it's pre-filled out in the donation forms as well because we work directly with you. We know what those account numbers are or what those DTC numbers are and things like that. So we're also taking some of the legwork out on their end of having to either find it on your website or reach out to you and you share it and then them reach back out. And so really, we're trying to, like you said, consolidate everything, right? Get the information from you as the organization, get the information from them as the donor, get the information from their brokerage firm, put it all in one place and make it as easy as possible. Great. I'll show just real quick the donor advised fund as well. This one is a little bit different from stocks and IRA, mostly because you're actually going to be able to do it without leaving the site. So it's let's see, I'll still put in all the basic information. Um, and then I'll be able to still choose the designation. Let's say for this one, I'm going to do the Christmas Forever Fund. I save that information. I say, here's how much I want. Let's say I want to do $500 DAF. It's going to be review all that information, and then you're actually going to be able to do it right through a thing called DAF Pay. This is hosted by our partner Chariot. But what you're going to do is you're going to click on that. If my internet stops freezing on me. Let me reload this page and see if that works. Oh, it got mad at me. What it's going to do is actually allow you to log into your DAF portal. So let's say you hold your DAF through Daffy. It's going to if you click on that button, it's going to bring up on the screen your login for Daffy. You log into your Daffy account and make the recommendation straight from there using the free will information that we already gathered. So let me try it one more time. I apologize for my internet being wonky today. But any questions about that while I'm filling out this information? Let me see if I can make this. For whatever reason, it is freezing on me right here today. But you'll click this and then literally on the screen, it becomes the portal to log in. I'm not sure why it's freezing on me at this moment. I'll see if I can stop sharing my screen and then open a different window to do it. But any questions about that? Or has anyone donated from their DAF and using our tool that's currently on the call? That would be interesting to hear, actually.
While Chris gets that loaded up, I just thought I would share. I use donor advised funds for my charitable giving, and there's a number of benefits, obviously, as Travis and Chris have lifted up. One that I also really like is it just keeps all my records in one place, and so when I go to my donor portal, I can see who are the people that I've given to in the past, and it's easy to repeat those gifts, and it's easy to track where I'm giving and what I'm giving. So I like the kind of all-in-one placeness of the donor advised fund. I found it a simple way to organize myself.
Yeah, thanks for sharing that. That is the hope, is that we're making this as easy as possible. There we go. I got it to load this time. So, can everybody see that okay? Once you click the donate DAF, it'll come up and say select your provider and check out with your donor advised fund. And then you'll scroll through. You can also type in like who's your DAF provider. But like I said, maybe it's Daffy. I click on Daffy because after you select continue, you'll be taken to Daffy, authenticate with Daffy, and then you'll be directed back to Chariot. So again, I'll click on it, and it actually, what you can't see is it opened a separate window for me to log into my Daffy account. Once I log into Daffy, it will bring me back to finish the gift here. I actually don't have a donor advice fund, so I can't log into one to show that part to you. But that's the whole thing, is that we want to make it right here, get all the information, authenticate with your donor advised fund, and then come back. Does it allow access to all local community foundations? I would be hesitant to say all local community foundations, but we do have a lot of community foundations with our partnership through Chariot. They're consistently adding more and more providers.
Yeah, that's really great. And thanks so much, Chris. And I saw that David asked a question earlier about the link to the free will resource. So on the Every Age Foundation site, we have it very clearly listed under the planned giving section. Andrew, do you want to direct folks to where they can find it for Michigan and Wisconsin?
So we're working to integrate it into our donate buttons. I will send a follow-up email that will have direct links to the smart giving pages for Wisconsin and Michigan.
That sounds great. Yep. So everyone that attended the webinar today or registered will receive some additional information. And if we can be helpful in any way, we certainly are happy to help you to navigate these opportunities. So as we wrap up today, I want to thank each of you for taking the time to be part of this conversation about smart giving. Generosity is not just about what we give, it's about how we give. And today we've seen that there, with just a little bit of knowledge, and planning, we can make our giving more impactful, more tax efficient, and more aligned with the values that matter to us personally. So if you have one takeaway from today, let it be this: that you have the power to give wisely. whether that means donating appreciated assets, using your IRA for good, or setting up a donor advised fund. These tools exist to help your generosity go further, to support the causes and communities that reflect your values, your priorities, and your hope for the future. So I'd like to give a very special thanks to Travis Marks and also Chris Hall for sharing their expertise and for reminding us that financial wisdom and generosity really do go hand in hand. And thank you, each of you, for joining us today. We hope that we've sparked some ideas and encouraged you to explore new ways to make your giving both meaningful and also strategic. And I'll turn things over to Andrew for information about our next gathering.
Thank you, Thad. I hope you all will join us. Thank you for joining us today, and I encourage you to join us in our next webinar on two-way giving, life income arrangements that pay you. We'll be exploring how charitable gift annuities and charitable remainder trusts can turn a heavy tax burden into both steady income for you and an opportunity for a lasting impact for the charities that you value the most. That will be next Thursday, and at the same time, we'll include the link in our follow-up email. Thank you all for joining us. Take care.